Prime Minister Najib Razak has promised a mildly expansionary and very inclusive budget 2018. The PM says the new spending framework will ensure that all groups of people will be taken into consideration based on priorities and what the government deems needs to be done. And there will be an increase in programs for the people in many aspects, some of which, he says, have never been done before. Putrajaya, however, will keep to its commitment of fiscal consolidation, with 2017 fiscal deficit expected to be 3% of GDP. It will be a sound budget in the sense that it is responsible, prudent, and a budget that cares for the interests of the people. Najib will table Budget 2018 in Parliament tomorrow. Public Bank has posted a 13.4% increase in its third quarter net profit as interest, fee and commission-based income rose. Earnings came in at 1.4 billion ringgit versus 1.2 billion a year earlier. Revenue came in at 5.3 billion ringgit, an increase of some 6% from last year's 5 billion. The group expects to maintain its leading market position in the domestic retail segment, driven by continued growth in loans for home mortgages and the SMEs. It aims to sustain financing growth in the residential property segment, focusing on the mass market and home mortgages for owner occupation as well as hire purchase. Lotte Chemical Titan's third quarter net profit fell by almost 34% due to lower sales volume and higher unit production cost. Its earnings stood at 230.3 million ringgit as compared with 348.3 million in 2016. Revenue increased slightly to 2.02 billion ringgit from 2 billion last year. Lotte expects the petrochemicals market to continue to be resilient in the near term, with demand growth for petrochemicals to outpace the rate of new supply additions in the region. It also expects higher production output in 4Q17 versus 3Q17 in view of no major plant shutdown and the commissioning of its new TE3 plant. The group is looking at a positive performance for the fiscal year ending December 31st, 2017. Utility giant Tenaga Nasional is adopting a new dividend policy with a 30% to 60% dividend payout ratio. This is higher than the 30% to 50% policy announced last December. Tenaga says this new policy will provide stable and sustainable dividends to shareholders while keeping an efficient capital structure to cater to its business prospects. TNB also reported its latest quarterly earnings today, which shrank by 2.4% due to higher operating expenses. 4Q net profit stood at 1.72 billion ringgit as compared with last year's 1.76 billion. However, revenue was 10.9% higher at 12.5 billion from 11.2 billion a year ago. Going forward, TNB expects the unit electricity demand growth as well as its prospects to be stable in FY18. OneMDB is asking opposition lawmaker Tony Phua not to mislead the public. The state fund says its obligations, which primarily comprise long-term bond and sukuk debt, total about 32.5 billion ringgit and not 40 billion as quoted by Phua. Last year, OneMDB transferred assets including the Tun Razak Exchange, Bandar Malaysia and Pulau Indah Land and Air Hitam Land projects to MOF Inc. It says it will receive payments for these projects over time. Along with asset monetization proceeds, these funds will be used to meet its remaining obligations. And if one takes into consideration the cash, dividends and other costs, OneMDB says it actually achieved near break-even after disposing its energy assets to China CGN. In fact, OneMDB says its rationalisation program will actually result in a surplus of 3 billion ringgit generated over time.